Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again is Eric Sprott from Sprott Asset Management in Toronto, Canada. Eric Sprott, thank you so much for joining us today on USA Watchdog.
Hey, Greg, always a pleasure. Always willing to help because I know you're providing a great service to your viewers.
Well, last week, this taper tantrum, we're going to do it. The consensus is 10 to 15 billion, with the Federal Reserve cutting back that 85 billion a month. And then, surprise, the economy isn't so great, according to the Fed, after telling us we have a recovery, and we're going to continue to print 85 billion a month. Stock market goes up to all-time highs. I sat in my living room and went, boy, things must be bad. But what do I know? I'm not a billionaire, a fund manager like yourself. What do you think?
Well, Greg, I've been on record as thinking that tapering was totally impractical. I think the bigger thing that Mr. Bernanke had to concern himself with was losing control of the bond market, which I think, the rates having risen from 1.47 up to 3, with not even a dollar of taper, was very telling. And, of course, it's worrying because the two strongest parts of the U.S. economy were the home market and autos, both of which are huge beneficiaries of low interest rates. And, of course, with these rates going up, the cost of buying a house today is about 50% higher than it was a year ago when you include the cost of carry. And, of course, the house is up 10%. So you knew that things would weaken off in the housing sector. And obviously the Fed knows that. And I always thought it was impractical from the point of view of the flow of money to taper, because you've had some big sales of U.S. Treasuries by various governments, particularly the Chinese 2 months ago was selling 22, and I think Japan sold 25. This last reported month, Japan came in about 56 or 55 billion a bond. I'm sure under some cooperative agreement with the Fed, otherwise rates would have gone way higher. So I never thought it was practical they would do it. My best guess is that maybe they would say, well, we're not going to do it in September, but, there's a stronger likelihood we'll do it in December. Well, having read what they said, it doesn't even sound like they're going to do it in December now. And, if my forecast for the U.S. economy is true, they won't be doing it forever.
Well, then, back to your premise with precious metals, hard assets. I know that you're selling some of your silver to get into silver mining, to get into mining. Is that right?
That's correct. I think that the big play is going to be in the mining stocks because typically they move at least 2 to 3 times any percent move in the price of the precious metals. I'm very optimistic about the price of metals here. Greg, when we look back with 2020 hindsight, we had this word taper came out, I guess it was in April or May, and of course it was a great excuse to bomb gold. And now that's off the table. And I think, we had a good spurt the day of the announcement, and I think we'll continue to see people moving into gold here. As you commented, the U.S. dollar is under incredible pressure here. I would think, and it's interesting, I was in China just recently, and I said, the first thing I want to tell you is that the U.S. government's insolvent. There's just no doubt in my mind about that they will not be able to honor their promises, whether it's the debt, but more importantly, entitlement promises. And I analogize between the U.S. government and Detroit. We knew Detroit was bankrupt 10 years ago. They did nothing. And 9 years ago and 8 years ago. I can guarantee you the U.S. government is insolvent today, but they're just not doing anything about it. So when they finally do something about it, instead of the entitlements being cut by 25 or 40%, maybe they'll be just like Detroit, they'll be cut by 75%. So, and that's just cast in stone in my mind, using the government's own data points.
Well, that's pretty startling. And the other thing, that strikes me with this, the rise in the 10-year Treasury, which just in May it was like 1.6 something percent, and now it's, in the 2.7, 2.8 range, even though it came down some from the taper thing. But this is with $85 billion a month in bond buying, and it still went up.
Yeah, but the other important thing, Greg, is we had the Japanese come in to buy bonds in the last 4 months too, at a huge clip per month. So we're buying more bonds than we've ever bought on a daily basis, and rates went higher, which is why I think I can say definitively that the Fed lost control of the bond market. And that's why they couldn't taper, because if they did taper, who's going to buy all the bonds? And they had to hang in there. And in fact, as you know, they recycle even the interest payments. So even as they buy 85 billion each month, there's more interest payments on those bonds. So it's literally they're buying more bonds every day.
Well, on Tuesday, the 24th, you're having the Sprott Precious Metals Roundtable, and the question you're asking is where do we go from here? It's you, it's Dr. Faber, it's Rick Rule, it's Mr. Embry, pretty much an all-star cast of people who are into precious metals. And Dr. Faber, one of your guests, after this taper, announcement that they're not going to do it, he said, and I want to quote him on this, as it's the end game is total collapse, but only from a higher diving board. That's almost a direct quote. The end game is total collapse, only from a higher diving board. This is Dr. Mark Faber. This isn't a guy held up in a cave somewhere in Sri Lanka. Yeah. I mean, that to me scares the daylights out of me. And then you're saying, well, the U.S. government is insolvent. He's saying the end game is total collapse. And so, what happens to your, do you agree with him on that?
Well, I always find it interesting that there are a number of people who could have identified the problem throughout the last decade. And Mark obviously was one of those people. I believe I was one of those people. And I tend to believe people who could see it coming. The people that couldn't see it coming, I don't have the time of day for. And of course, you've got all these mainstream media types who said the economy is going to grow, whatever, and it never does. And yet some of us look at it and say, well, this is an intractable problem. There's no way that there's a solution to this problem. We have more debt now than when Lehman collapsed.
Well, to your point, all this, the consensus of economists was, 10 to 15 billion taper. Well, then don't talk to those guys anymore because they totally missed it. I mean, you're on and saying, oh, no, they can't stop tapering. Jim Sinclair, I mean, his quote a couple of years ago, once they started this, he said, oh, it's QE to infinity. Everybody looked at him and laughed at him. People looking at you like, oh, no, they can't stop. Well, what do you know? And it's like, you guys are right and they're wrong. So let's get around to the price of silver. After this non-taper, they're going to, put off tapering. Gold shot up more than $50. Silver was up $1.25, which is a huge day for silver.
Huge.
That's, a big move. But what I'm finding from people that write me, one guy writes me and says, I couldn't find silver, and if I did, it was a $12.50 commission on it. And then, we've already in the U.S., I know you're in Canada, but in the U.S., Silver Eagles have already sold as many this year, today, as they sold all of last year in 2012. Are we going to reach a time where they're going to run out, at least at this price?
I think that we're going to reach a time when they run out of gold and silver at these prices. And I've always argued, Greg, that I can see physical demand for gold, really being twice mine supply today. And the only reason it's being stated is obviously the Western central banks are supplying that gold surreptitiously into the market. Because you look at the ounces being imported into China, they're just overwhelming the stock market. And that's why I think the central planners went to the Central Bank of India and said, you have to stop your people from buying gold. And there's hardly a week goes by that they don't come out with another draconian move one after another to try to prevent the Indians from buying gold right now. Because the problem in the physical market is right now. And if the Indians were buying their regular 100 tons a month, and the Chinese are buying their 110 tons a month, we only mine 185 tons, and we haven't even dealt with the rest of the world yet. So I think there's going to be a shortage of all of them. Referring back to silver, the most meaningful data point I can ever tell anyone about silver is that the U.S. Mint sells 50 times more silver than gold. Silver is mined 11 to 1 to gold. It's available for investment 3 to 1. But people are buying it from the mint at 50 to 1. And in fact, last month it was something like 300 to 1, the ratio of silver to gold. That's because gold sales were quite weak last month. But silver has been strong. I think it's been back ordered for a long time. We only get reports every Monday, once a week now. And typically they sell about 600,000 ounces every week. So we'll far exceed the previous year's amount of silver that's sold by the U.S. Mint.
Well, isn't mining? I mean, right now we're in the 1300s in gold, and we're in the 20s in silver. I mean, is it for a lot of mines? Isn't around the 1300 mark is where they're just barely breaking even? For a lot of silver mines, isn't the 20, 22, $25 mark? Isn't that where they're just starting to make money? Or am I wrong on that?
No, no, you're right. They're both around those levels. They're probably, with today's prices, maybe scratching out a few percent profit. But certainly some mines, for example, a South African mine, that cost, I'm sure, well above today's price. As you know, we've already had some mine closures announced in Canada and in the U.S., in Australia. We've had certain people cut back on exploration, certain people cut back on development, certain people cut back on CapEx. So the one thing I think we can say with a great deal of safety is that production will be down this year, and if today's trends continue, it'll be down again next year. And production from 2000 has not gone up at all, but the demand for gold keeps going up. In fact, the most relevant statistic I can give you, between 2011 and today, the Chinese, just from shipping through Hong Kong, have come in and grabbed 25% of the gold market, a fresh additional 25% of the gold market. Now, how can one country buy 25% of the gold market? Imagine if it's the oil market, or the wheat market, or the corn market, and have the price go down. That's just unheard of. So somebody's supplying that gold to the market, and it must be the Western central banks.
And aren't they manipulating the prices? I mean, for the longest time, people are like, "Oh, tinfoil hat crowd. Oh, their government's not manipulating." I mean, we've had one report, one whistleblower after another. I mean, Andrew Maguire, has come out and he does the math on it and says, "Hey, they're just manipulated. It's manipulated."
Right.
I mean, right? I mean, that's what's going on. When does the manipulation stop? Because a lot of people are out there frustrated. I know you've caught a lot of grief just in most recent interviews. People, basically paint a picture where you lied, or you're some kind of a charlatan, or you're selling silver to buy silver mines. And I just think, this is a big, long picture. They're printing money like toilet paper and candy wrappers. Oop, I'm sorry. That downgrades toilet paper and candy wrappers. And so, but, why do you answer the criticism that people are, I bought it 40 and it's 23, or, how do you answer that criticism?
Well, Greg, there's no doubt that if you were amongst the central planners and you're trying to make people believe in your currency, and as a central banker that having a zero interest rate policy and printing money are a total Ponzi scheme. Everybody knows it. But most people are prepared to fade the Fed here. And if the market wants to go up because of it, I'm going to go along with it. But there are always unintended consequences to that. So, for example, if I was the Chinese government and I saw that the U.S. government was essentially insolvent, I'd be selling my treasury bonds so fast you couldn't believe it. And I'd be buying gold and silver and oil and all those basic commodities that are going to hold their value on a relative basis. So it's unfortunate. I've been in this gold market to sort of a point of discussing it for the last 13 years, right at the bottom. And it's been a struggle every day. And every day it looks like, gold should always go up, but then we get these very violent things happen in the market, most of which are not explained by anything, and to think that some of the excuses like taper just didn't ever happen. And now we have the price of gold down $300 or $400 this year, which never should have happened. And we're going to get it back. And someday there will be a failure at the COMEX or the LBMA because the demand is just surging. If they ever let the Indians come in and buy gold again in the amounts that they were buying just before all these draconian measures were announced, I mean, these central banks, if the gold would be pouring out of the vaults, if there is any left, which I rather doubt.
So when do you think this, well, first of all, before we move on, I wanted to tell people, too, that, people just look at you in the prism of this last couple of years, but, man, when I first did my interview with you, you were the rock star of rock star for 10 years. I mean, you were getting in at $4 silver, and you were telling people to buy gold at $2.80 or $2 whatever. I mean, down there near the bottom. And, right. For 10 years, you were boom, 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 15, 20% a year. And so, it's the last couple of people need to look at this in a long career. I mean, you've had a lot of wins, and now you're doubling down, basically. Is that right?
Well, essentially, and I'm buying a lot of equities these days, okay? And I'm buying them personally, and I'm buying them for our funds. And in the case of the funds, I'm selling silver to buy those equities. And it's an interesting point that posed to non-taper. I mean, the stocks went up about 9% in the day, while gold was up 4%. So that's the type of thing I expect to have happen in the equity markets. The stocks by far will outperform the bullion, because lots of people have been shorting stocks, and everyone says it's the death knell of gold and silver. And the stocks are really taking the chops here. But just like '08, I mean, they got killed for 70%. They went up 200, and I think it was 50% in less than a year. So that's the kind of move I think we'll see here.
I got it. Okay. And were you worried about nationalization of mines? I mean, if what happens with Dr. Mark Farber says that the end game is collapse, are you worried about the Canadian mines or U.S. mines, wherever the mines that you have around the globe? Are you worried about them being nationalized?
Well, you have to worry about things like that because the people in power will almost in every instance try to do anything to maintain power. And then we've seen that happen in different places, different countries that are more extreme than others. Luckily, we have portfolios that are all around the world, and quite frankly, the more they nationalize them, the less gold there will be. Because once a country gets involved, of course, gold production comes down. So I kind of take it as good news and bad news. If they want to, some country wants to nationalize their gold producers, fine. I now know that there'll be even less gold out there, and the demand's already in excess of the supply, so we'll see it go up. I agree that there's some risk of nationalization, but there might be some rule of law that nationalization has to be done at a reasonable level too. We'll see. I think the more important thing to the central plan is to try to get control of the gold market back, because it's the physical gold market that I think they've lost control of. Even though they can affect the price in the short term, it just has created this tsunami of physical demand that I think has put them in great stress in this market.
Well, I want to get back here to the U.S. because the U.S. is, a big, when it splashes around the tub, it makes waves. And the Republicans are going to try to, from the leadership, going to try to defund Obamacare, which could end up in a vote that, they just don't get a debt ceiling rise. They don't get a budget. We shut down the government. I mean, what happens to paper money? I mean, in the 90s, we shut down the government, but, it was kind of an inconvenience. Now we shut down the government, and, could it cause global calamity?
And that's a distinct possibility. And I don't really know what's likely to happen in the Congress because, as you know, it's very fluid down there. I suspect there will be a new debt limit for sure. I think probably the Republicans have a good plank on trying to prevent Obamacare, because I think Obamacare is going to be devastating for the economy. Not that rising interest rates and rising fuel prices aren't enough. As you know, there's very little economic growth, if any, going on based on retail sales and consumer confidence numbers and home sales. So no matter what the problems are in the political area, I think the biggest issue that everyone can lean on is the 70% of the population is regressing here. And how can you expect your economy to grow when 70 people are worse off year after year after year? So this little bit of growth that we had in autos and homes because of low interest rates, zero interest rates, is going to cease. And we've already had, I think, the permits fallen by the loan applications have fallen by 70% off the peak. So there's no doubt in my mind that we'll see a continuing slowdown in the economy, just like we did in 12. We went into 12 saying we'd have 3.5% growth. We came out of it with 0.8. We went into this year thinking we're going to have 3.5% growth. We'll probably come out with something less than 1. So, and this is with a lot of government largesse along the way. I mean, if there was no government largesse, where would we be? It would be in negative territory for certain.
Well, we'd be spiraling. I mean, we'd be, and the bond market could blow up. I mean, that's the real risk. I think that's what Mark Farber's worried about, is at some point people just say, we don't want your bonds. You're done. Thank you. Thank you. You buy them all.
Yeah.
Which
I've always said, Greg, that bonds are for losers. And I believe it. I think bonds are for losers. I mean, you're not getting enough of an interest rate to make it worth your while with inflation where it really is. And the only way you can try to overcome that is to own a real asset or a claim on a real asset, which, of course, the precious metals equity stocks does provide.
And then if you look at the Middle East, and I want to wrap it up with this, I mean, we dodged a big bullet. I thought, we were going to go to war. And,
Right.
Putin's op-ed piece, I talked about this with other guests, and I wasn't offended. I thought his one shot at the New York Times was, hey, this is going to turn into a wider war. That's what he was really saying.
Right.
This is not going to be what you think it is.
Yeah.
Which was a little scary, and I think he was, I know he's a former KGB guy. He's not a great guy on human rights, but I'm just talking about his op-ed, about, the risk that he was warning about. And that got missed in our media down here. The other thing was, what happens if Syria, this chemical weapons transfer, which is a daunting task, now, last week Syria said, the U.S. ought to pay $1 billion to get rid of these weapons. Oh, boy. I'm another wrinkle in a wrinkly sheet. And then you have the president basically, in not so subtle terms, threatening Iran.
Right.
And Iran saying, well, all the problems are the Israelis.
Yeah.
Which
I think the problems of the Mideast, of course, never go away, right? And unfortunately, like even the middle-class Americans are suffering, the lower-class Mideasterners are suffering. And, what happened in Egypt could easily happen somewhere else. And, it's not good that certain segments of the population are being hugely negatively affected, particularly with oil being such a major cost for everyone. And we have the price of oil, verging near record highs here. And God forbid that something actually happens over there and the price of oil goes up. That would be awful for everybody. And more so, by the way, for those developing countries than for developed countries, because they consume more energy per capita. And it's very critical to the whole food supply. So I don't know specifically what's going to happen in Syria, but we know the whole Mideast is quite a tinderbox, as are other places in the world. But I always fall back, Greg, on the fact that we have a physical shortage of gold that seems so obvious to me and should seem so obvious to the producers. In fact, I wonder why the producers just don't say, let's say, for example, counter the Indian ruling. Well, why don't we all just hold on to our gold for 3 months here and let's see what happens? That's probably what they should do.
So if there is war in the Middle East, it's just one of the many black swans that would take the metal much higher?
Yeah, but I don't want to rely on a black swan per se. I think it's already in train what should happen to the price of gold. It's been in train for 13 years now. We've just had aberrations and anomalies in the market that I think the market should see through now that we have no taper, now that we have no growth, now that we have higher yields, now that we have stress in the bond market. Surely to God, as an asset class, gold and silver is a place that more and more people would be sort of waking up to these days. And that's what I think will happen here post this non-taper event.
Final question with all this is, what do you think the odds are of them having, a force majeure, or, when they come out and say we cannot or will not deliver gold or silver from LBMA or COMEX? How you in the past you said they're running on fumes. Well, they've got to be running on scraping the gas tank by now.
Yeah. Right. And that's what I think is likely to happen here. In fact, we've already had a force majeure when the U.S. wouldn't give Germany their gold back, and we've had other events that tell us that. We've had various tip-offs that there's a shortage with the COMEX inventory down, with the rating of the ETFs and the trusts. We're not far from a situation where it'll become obvious to everyone that there's way more demand for gold than there is supply.
And that happens this year and next?
Well, I would say it's been happening actually since late last year. It's just that various moves have been brought around to kind of. For example, we took 700 tons out of the ETFs and the trusts, which of course is a huge amount of gold when you're only mining 2,200 tons outside of China and Russia. I mean, it's almost on an annualized rate 60% more gold supply. So we've now seen that carnage at the GLD trust kind of end. It looks like they're kind of status quo in terms of people withdrawing gold. So. Now, if, in the second half, you don't get that 700 tons to deliver, and China keeps up their appetite the way it is, somebody's got to come up with a goal here. I just know that demand is way beyond supply at the present time.
Eric Sprott, Sprott Asset Management. Before we close, let's talk about your roundtable. It comes up on Tuesday. I'm looking at the calendar, the 24th of September. Right. Tell me about your roundtable. Why are you doing this?
Well, we're doing it to bring attention to the precious metals markets. As you know, it's been a real battle, Greg, here because, we always look like we're on the losing side. But I think there's some very, very powerful arguments. As you've mentioned, Mark Bobber thinks that we could have a collapse. I certainly think the system will not function properly. John Emery's been a huge supporter of the precious metals. And Rick Rule, of course, will weigh in on platinum and palladium. And I just think it's a nice forum for everyone to hear four people one time, a quick hour, a little Q&A, and we could all reassure ourselves that we're going down the right road, notwithstanding the mainstream media trying to tell us that it's not the place to be, because it is the place to be and always has been the place to be for the last 13 years.
And how do people see that? Is that Sprott.com, or where do they go?
They can register through Sprott.com. That's what I would suggest they do. And you can just sign up, and we'll be happy to have them on our list.
Well, thank you for giving me a preview. Eric Sprott, Sprott Asset Management, thank you for joining us today on USAWatchdog.com.
Okay, great. Keep up the great work. All the best.